One thing people need to realize is the cost of repairing cars have gone up. And one of the key areas people forget about is whenever you see that dollar going up, whenever you see a dollar going from 80 shillings or 90 shillings to 110, that means your spare parts coming into the country, which are priced in the dollar, are also going up. Okay? So on one side, you're paying your insurance premium in Kenya shillings, but your repair cost has some currency, exposure. So some of those factors are eating into the insurance company's costs. I know some insurance companies' prices are a bit soft, not as what they should charge, but in the whole of it, the money out is more than the money in. So Moto is one of the key insurance services in Kenya. And why is that? Is because if you look at general insurance, Moto composes a third of that business. It's about 45 billion shillings. Medical is another arm, which is about 42 there. And then the other classes, the other ones that you know about, marine, work injury benefit and the rest. So Moto is a critical class. In fact, 20 years ago, Moto was 50% of the market. So it's just the growth of the other classes that's driving it. And one of the key things helping Moto is because we have a mandatory requirement to have motor insurance for our cars. And the mandatory insurance is not the comprehensive. I always tell people it's the third party which is comprehensive. Then people can buy, comprehensive insurance. So Moto in our market is mandatory, and the key benefits are, if you hit somebody on the road or you hit somebody's car, you get reimbursed. So that's really the purpose of the motor insurance. So the key thing people should check out is, what am I being paid for? What is the insurance going to cover? I know insurance in Kenya has been, we call it commoditized, so it's just, the rate is X percent without checking the risks. But starting, I think last year, the insurance companies are getting wiser and they're a bit more, innovative towards who should pay more. So we've started at the first level, which is value of car, because the statistics have shown cost of repairing a more expensive car compared to the value of the car is lower than these other cars. So that's a key area that people should look out for. And also type of insurance company you're working with. One is you also need to look at insurance companies who are profitable. Why? Why do you want somebody profitable? It's a very simple thing. If somebody is profitable, it means that they have money to listen to you in case you want a favor. We call it ex gratia. But sometimes it applies to more of the large corporates. But also, if you look at an insurance company that is profitable, they might be a bit more lenient on you. But if somebody is making losses because they didn't collect enough money to pay claims, it's not that they don't want to pay you extra, it's just that they don't have the money. Buying any product, whether you're buying a TV or a phone, you still need to look at what are you buying. The problem is that since motor insurance has a mandatory side to it, people tend to ignore the features. It's like if we're all forced to buy phones and then we just don't care about which phones we are buying. That is where motor insurance has gone to. One of the areas people need to understand is that if you hit somebody on the road, it's you who has hit the person. It's not the insurer. So the insurer reimburses you up to what he promised you. So if, for example, you hit somebody on the road and they sue you for 5 million shillings, if your policy only pays 3 million, then that is what you'll get. You still have to pay the extra 2 million. You should be keen on checking, what are you really purchasing, and those are very cheap services. Some insurance companies charge you, like 1,000 shillings for every million extra, some small amounts. So those small enhancements are the ones I would say consumers need to look out for. People need to check what are my third-party property damage limits? What am I getting back if I hit somebody on the road? There are also areas where insurance companies look at your passengers. Let's say you're carrying somebody and then there's an accident. There are also some benefits where they cover you for legal costs because somebody might sue you. So legal liability there. Also, there may be other areas that consumers like to look at, like windscreen. But also the windscreen also has a limit. They might say we'll pay you 50,000 for your windscreen, but to replace your windscreen you may need 100,000. So that's now where the consumers start getting angry because they feel that the assumption was that if I do anything on the road, one, it's not my fault, and two, since I'm not the one paying, I should not be involved. Consumers need to understand that it's you who was on the road, it's you who caused the accident. The insurer is just coming to be your friend, to pay your bills. The first thing you need to know is that the insurance company has asked for a small amount in exchange to promise a big amount. So those are the fundamentals. They ask you pay us 4 shillings in exchange for 100 shillings in case some rules happened. So now paying you back that 100 shillings is where the complexity comes in, and that is where the consumers need to know. Now, one of the key areas insurance look at is small claims. Okay, insurance companies prefer if you pay the small claims. Now we've come up with a fancy word for it. We call it excess. So we say you pay the small claims, maybe 20,000 shillings, 10,000 shillings. You pay it, and then the insurer only pays big claims. And it's really just to make sure you're more careful on the road. So that is called excess. Now, if you want to not pay for excess, you buy an excess protector. So that's how that's one of the key areas. The second one is insurance companies also look at cause. We have exclusions. For example, if you look at one of the key exclusions that insurance policies had, and this is historical, it's not a Kenya issue, but just globally, is things like war, civil uprising. So political violence and terrorism was one of the key exclusions that people are not covered for. So that one is an area that you need to look at buying back. A third area which insurance companies like to upsell to consumers is something called courtesy car. Courtesy car is simply assuming your car is in the garage, you can get a car, but then they base it based on the number of days or the car value. So those are what we call the famous benefits.